Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 8th. Michael Boutros with you on the wire. Hey, Jay, Rizwan, Rohan, great to see you guys all in the room. Interesting setup, getting deeper into the week. We've gotten a lot of back and forth. I still love the broader trades as far as the levels of where we're trading at, but we're getting a little indecision here. So we're coming at the turn of the tide. Again, it's just the first close of the first full week of October here. On the menu, we'll hit DXY, dollar CAD, Aussie, dollar Swiss, gold, sterling, yen, euro, kiwi, and peso. We got a full jam-packed morning. So I got a limited time this morning, guys. I got to get through this. Let me know if you have any questions or trade setups as we go through. Hey, Jay, great to see you in the room. Mike, I thought euro dollar break 1754 may have had more follow through. I agree with you, Rohan. I got stopped out on that one. I'll show you in a minute. Here's DXY. Weekly chart, nothing's changed. We're still focused on this turn off of downtrend resistance. The former opening range low for the year came right into it and pulled back. We're gauging this pullback. All things held constant, constructive above 92.89. I don't want to see it get down there, but it would still technically be a constructive trade with that reversal off of uptrend support, multi-year uptrend support. So we're in this little pause region. We've come off of major trend, up higher, first correction within the embedded descent. We're looking for exhaustion on the downside. Here's DXY on the daily. We're trading into this pivotal support we have been all week. It's a basic 38.2 of the advance. You have slope support there as well. And we've been looking for some sort of support bounce here all week. Look at this on a closed basis. It's right there. Hey, Marcin, great seeing the room. Rohan, Aurelian, good morning, guys. But on a closed basis, it's still there. You know what I mean? So you're ranging right below the monthly open. The monthly opening range highs are just higher, right into that crack. We want to see something happen here. We want to see something happen. Now, if it opens up the downside, not the favored scenario, you're basically risking 93. 92.89 is a 50% in there somewhere right in between around 93.20s, but that's sort of the outlook. If this holds, we still need a definitive close above that March trend line to validate the resumptive move for the uptrend. Remember, we turned at 100 exactly. So if this was corrective and this is the extent of it, we shouldn't actually see much upside here. This should break down. We're, again, making the assumption this is a bigger slope support that we're coming off of here on the weekly charts. So what does the intraday say? Here's what it looks like. And here's what it'll look like earlier in the week. Where was the DXY up there? Right here. This was on the 6th. So we had broken below this confluence support zone, that 93, that 38.2 retracement rather at 93.60. And we said, look, if we're going to hold resistance here, right on, continue lower. But if this doesn't hold, well, we got a lot for the resumptive trade, which is what we were favoring last week. Well, here's the break. You got a bit of an accelerated run, but the weekly opening range highs held, and you got the pullback. So the result is now you have a weekly opening range still intact on Thursday, right along the plane, right along the slope. You know, not a favorite scenario from a trading standpoint, from like a swing trade standpoint. I had to get into this. The favored scenario, ideally, you break 94, and that gives you the resumptive trade. But at the end of the day, you know, if this corrects lower, guys, you know, we're going to see 93. And I don't want to be too stringent. We're way too early in the month, way too early just in the quarter for us to get too aggressive. So that's the look on DXY. It's a little hairy here. Euro's the same thing. Okay, is the break lower a fake out, Rohan? Good question. Here's Euro. Here's Euro. It could have been, and that's what we're looking for clarification in price over the next day or so. Here's Euro. I completely agree with you. You were asking, did the break below 1754 should have got more? Absolutely, I agree with you on that. Guys, this was a trade I'd never advise you guys to take, but I took it anyway. I happened to be right in front of the terminal when the news broke that uh, the talks had broken down with regards to stimulus, and that the negotiations is similarly had essentially terminated. Right? Um, we were looking for a short. I was looking for a trigger, and it kind of just started to play out. Bought the break, never sold the break rather. Never want to do that because you have no respective stop, but it worked. We got a 20 pip on the run, shaved off half of it. We came right back into 1754, got a little concerned, then then they got stopped out break even on the rest. So yeah, it took a little snippet of it, a little frustrating because you would have thought that would have been the trigger that we needed to get the onslaught. But at the end of the day, it's the same trade, Rohan, as DXY. Here's your weekly open. You stretched into a high on a Monday, Tuesday stretch. You failed ahead of the weekly open. You didn't even make it to the weekly open. And here's the consolidation. So look, the broader picture, again, let's not forget where we are in trend, right? The broader picture for Euro has been constructive. Again, back on the weekly chart, we're still bullish on the longer term front. Our focus has been on, do we get a deeper correction here first? Does the dollar alleviate? And I still think that's a scenario we need to keep into account, Rohan, as long as you're below 1823, 1835. It's the 618 retracement of the entire 2018 decline. It's the high week reversal close for this year. So even if we were to correct a little bit higher, I'm still thinking there's the risk for this deeper washout in Euro before resumption. Here's what it looks like on the daily chart. Again, same exact sort of tendency that you're looking at here. Um, you can envision a scenario where we get another pop here, 1793, and then we stretch into 1850. But guess what? You're still in the descent. That would only be two equal legs off the low with scream correction, and it's the 618 off the high. My favorite Fibonacci confluences. So look, I hope we don't get up here. If we do, I'm looking for a stronger reaction because again, that's a major fib confluence. It's online with slope and uptrend resistance now. All converge right here. So exhaustion off 1793 or off 1853, that's still sort of the focus. If we get a break below 17 on a daily close, well, that's now the weekly opening range lows, the monthly opening range lows, the monthly open is at 17, 18. Do you have the scenario of a spike higher than 1808? Yeah, it's 1859, 1860. Rohan, that's the level. He says, I'm in a trade with a stop against the 1808. So, I mean, I'm not sure where your entry was. I have 1812, okay, as the 50% of the drop. So maybe I'm like a noisy intraday spike, but no, I mean, again, Rohan, I can't tell you what to do exactly on your positioning. From my standpoint, ideal scenario, fairy tales and rainbows. We see failure here and we break lower for a deeper correction before the bounce or before the resumptive trade higher. At the end of the day, it's a weekly opening range based on just Monday, Tuesday stretch. If you breach these highs, if you break 1808, the risk is still that 1860 stretch. So just be aware that that's sort of your main level to trade against. This was an initial target. If you look back to the updates, here's the last update on Euro, I believe was over here, right? We were just coming into this spot. And we were saying, look, this is perfect if we get resistance right here, and we got it, right? We got one more try to push higher, and here's the drop, quickly recovered. Tells you there's no no momentum, excuse my lingo. RSI is right at 50. There's just no push behind this right now. So I would keep the powder dry, Rohan. If you're in that short, if it's a break-even stop, I would just sit in it, see if you can get the push lower. But note that if you break these highs, especially 1812, you're likely to get another run higher before. Again, not my favorite scenario, but when the markets lose momentum like this and you get a range, you have to sit tight. You have to sit tight. So I think it was worth the stab on the short. I don't blame you for that one, Rohan. I was there with you. But on the recovery here, We want to kind of make sure this stays trimmed below below 18 ideally, but it's early. So that's DXY and Euro in a nutshell, 1 and 2. You know, I've been sort of really stalking this Euro trade. Again, we did a really phenomenal job last week. I don't want to get too aggressive on it this early, but let's see how this range pans out. Dollar CAD from last night looked like this. So coming into a major support pivot, we were talking about 32.56, 32.70 for quite some time. You guys know I was looking for a long here. Okay, we had a different slope a couple of days ago. We've adjusted it just a little bit more of a liberal approach here with the highs. But at the end of the day, you know, the long position, it worked out well, but again, quickly recovered, break even on the rest, and then here we are slipping below that key support pivot. If this is a real break, which I don't trust it, but let's say it is, you should be looking for resistance ahead of 32.70. Next downside's 32, 32.06 to be exact. Now, I'm just of the mindset, again, I'm just not trusting these moves right now. Here's dollar CAD on the daily. So it was an exact 100 off the low, screams correction. It held like a charm on a closed basis. No one's business, right? Pulled back. This is the first sort of test here. Break of uptrend support. This could be a false break of downtrend resistance. If we settle down here, it is quite problematic. It's quite problematic for the bulls. So today will be important. Look, we haven't actually, let me take a step back. Yesterday, we closed, okay, 32.54. And the retracement's at 32.56. If this was a real break, this should be accelerating right now. We should see things start to pick up. We're not getting that. So momentum at 50, right? All these things are just very unnerving for intra-week, intraday swing trades for this point. Here's what the intraday chart looks like again. You know, we've dribbled below the median line. We've dribbled below that support pivot. Again, objectively, this has been a major pivot in price. You can see swing lows, swing highs, break, acceleration, support. If we stay below 32.70, the risk is lower. But again, disclaimer, I'm not in this at this point. If we were to recover above 32.70 on the pullback, stop as close to that low would be the recovery trade if you try to play the rebound. But there's no, in my opinion, there's just no conviction here yet. So a little bit more reserved here too, right? I want to play the long. I want to be on the long side of the trade, but at the end of the day, this is not what we want to see. So shelving dollar CAD, another one that goes back on the shelf. This was an important long to hold if this was going to work. Again, you sort of unleash the risk of a larger decline here. And just to put things in perspective, if we are correcting lower, look where the 100 comes up. Right on the 618 of the advance, 100 off the high. So not my favorite scenario again, but all things held constant. If I were to take a snapshot in time and you were to show me this chart on the onset of a US Open, I'd be like, yeah, look for resistance at 32.70 and the stretch lower. Again, my reluctance because of where we are, maybe warranted, maybe unwarranted, but that's what we're looking at here with dollar CAD. Any questions on Looney? All right, moving right along. It's number 3. Number 4 is Aussie. So here's what Aussie looks like. We are testing resistance. I highlighted this region yesterday. Really nice rebound, again, right off downslope support, took it back above that 618. We were looking for a reaction at the weekly open. We're there right now. Now, mind you, it looks like we've broken the slope, but the lateral level holds. You're right slap in the middle of the weekly range, which was set just in a 2-day stretch. So again, one of those trades where the weekly opening range is set, but if you're not already positioned here, I'd be very reluctant to jump anything new. The ideal scenario for Aussie on this stretch was to look for that sort of drop down towards that 70-80 level, right? I know that Jamie's got half of the short off for you guys on the swing trade. We're at 70-90. So I want to see what happens here at the weekly open. If we pop through 72, still resistance. Remember earlier in the week on Aussie, as we were heading into the start of the week, that was the level we were looking for. We said specifically it's either 72.08 or 72.56 for the exhaustive trade. That's what we're looking for on this stretch. It rallied literally into 72.08 spot 9 and then pulled back. Okay, so that pullback did break initial support, but here's the recovery, and we're now unchanged for the week. So you're in for a weekly doji. Not the time to get aggressive on an intraday position. The sheer definition of market, you know, what's the word I'm looking for? Not indifference, but sort of price discovery right on bat. It's exactly a wash, right? So Aussie 72.08 is a level to beat to get the resumptive move higher. You're looking at that point 72, 56, 73 is a big zone. But if this doesn't hold and fails, the move towards 70-80 is still kind of what my base case scenario was for this. So loss of Momo, all of these trades weekly, right at 50. Every single major has kind of just made a move, retraced half the move, or come right back, almost unchanged on the week. And we just got to respect these ranges, guys. We just got to respect these ranges. Not surprising to see this kind of price action after this, right? Sort of like the hangover phase after the market makes an outside stretched, kind of like just chill out, look for the range to break, and we'll settle it from there. But all things held constant, again, could get a push higher before the resumptive move. Still think, and that eventually you look for topside exhaustion. Another one, unchanged on the week. Hope you got to play on it. I didn't really get much on Aussie this week, so we're still on tap to see if we can squeeze something out of this. But here is dollar Swiss. So another one that we've been following, and I wanted to highlight the support zone for you earlier in the week. If you guys go previously to the update on the 28th, our focus was on this resistance hold on the upslope, right? We obviously noted there was ongoing divergence, really nice hold into this slope. And we said, look, if it breaks back below the April high, 92.40, look for the larger correction. Key support 91, basically like 91.12. Wrong chart here. There we go. So the slope held, right? Resistance held, got a really nice mean pullback. 38.2 got taken out. You're right there, 91, just ahead of 91.12, right? And then you petered out into the start of the week. We rebounded right off that lower parallel. So I wanted to highlight yesterday this confluence region here. You got the 38.2 retracement, you got the weekly open. That would be the objective break for the dollar recovery story for the sort of resumptive trade, right? So we've broken this downslope, haven't quite made it through that region yet. Here's what it looks like now. And here's what it looked like back then. So nice hold on the pullback. Here's the stretch. If you're holding longs here, yeah, we're still kind of waiting for 91.90, 91.95 to be exact, which is kind of where we max this. But again, not really excited because you saw the break of slope. It's tested as support, but there's still no follow through. In fact, The weekly opening range is still preserved. So like, man, talk about bummer. We'll get clarity on this. We'll get clarity on this. But in the meantime, you just got to keep the powder dry. Here's what it looks like on the daily chart. I mean, doesn't get cleaner than this, right? You just came off slope support, but the bounce just hasn't had any type of momentum behind it. We're looking to see if that starts to gather pace. Questions on Swissy? Can we look at Kiwi Yen? Interesting. Yeah, put on the list. Okay, so that's Swissy. Gold. Gave you an update on that as well last night. Look, this one is very interesting as well. Here's the gold update. I hope some of you have been on this one. We're running back into resistance. 1902 is the focus right here into the US trade session today. If the break, okay, here was the trade as we had started out the week. We talked about the exhaustive move into 1920 early in the week. That was our sort of ideal scenario, was a stop or exhaustion rather at 1920 or 1935. 1935 converged at the start of the week on that upper parallel. That's changed, right? Time decay. The slope pushes out the significance of the lateral line. So obviously now we're lower, right? Focus on initial resistance is an exact 618 of the weekly range. It's the exact 820 swing low, okay? It's 1902, converges on downslope. Looking for reaction there today. Looking for reaction there today. Bearish invals 1920. You know, you look for an exhaustion high in this zone for a break and a probe lower, is my humble opinion on this. Again, the metrics look very plausible that you could get another outsized stretch rather to the upside just to complete some sort of correction off this. But at the end of the day, man, 1920 was huge. That's a 2011 high. Just a quick reminder, the record high. We made an outside day reversal off that high, typically a bearish development. So yeah, on this exhaustion pump here, I'm looking for an exhaustion high for another move. So again, just my take on what the technicals are saying here. Now you could be running into, well, let me take a step back. There's all this talk and all this obviously a headline event risk that we're running into with whether we get further stimulus, whether you know, there's just a whole bunch of stuff that are on the headlines. But to put a caveat on that, there's always that risk, right? We can't just be you know, sort of so fearful that we can't get into a position because all this, there's always looming risk. So I hear you, but don't let that, you know, be objective with what price is saying. At this point, all things held constant, on the back of the outside day reversal from fresh monthly highs, if this is heading lower, we should be looking for resistance ahead of 1920, maybe on an intraday stretch back into the parallel, but that's the basic idea. That's the basic idea. And depending on how granular you're getting with this, right, you could look for something like this, which stretches the upside a little bit more if we were going to get a sort of corrective pattern. So that 100 is like 1904. But even so, what a great spot. What a great spot. 100 off the 618 off the high, 100 off the low, 820 swing high, or swing low rather. Look for reaction there today in gold. Again, really thought we would see more downside, lots of chop. Well, you have to keep into account, Rohan, where I don't give you these warnings for no reason, guys. The beginnings and the starts of the crossovers for the month, and again, specifically on the quarterly crossovers, you get a lot of indecision, right? The market makes a move, then you get a whole pullback to see if there are any biters. Did the bulls clear out, or did the bears rather clear out the weak hands here, or is this just fishing? If it's fishing, as soon as we get back here, the bulls will reassert again. You make the next leg lower. But not too surprised to see this into the start of the month. No, not at all. Just take some more patience. And especially because we're conditioned. You know, that's the problem. You get a month like last month where you got a clear-cut break, clear-cut runs, trend was beautiful, really nice back and forth, and then you get this low. 3, 4, 5, 7 days where you're kind of just chopping. Markets are trying to kind of get in their groove as we're just opening up the new quarter. So you just got to take it in stride, stay nimble, and don't get FOMO. Don't get FOMO. Stay disciplined. Fear of missing out, by the way, guys. FOMO. just for clarity there. So that's gold, number 6. Number 7, sterling. So here's what British pound looks like as we open up the US trade session. It's been, again, no surprise, chop fest, but the key scenario, the key focus that we talked about on the 6th is exactly the scenario that panned out. Again, we've gotten a lot of back and forth, but the focus was, hey, we're at resistance, okay? 130, here's what it looks like on the daily chart. 2984 is the 38.2 retracement of the drop off the yearly high. Lows from August, 129.80. On the intraday chart, we had the median line right there into the start of the week. And then you had those swing highs from late September into the 130 handle. So big figure resistance, right? Well, look what happened. It was a beautiful setup. Again, I didn't personally get into this, but I hope some of you did. That arc held. You got another test. Stop against the highs. You're looking for a move into 38.2 retracement. Second target didn't get hit at 128.06. But here's the pump fake. And again, looks like exhaustion. I don't know, because we're right back slap. We're literally a weekly doji now. Maybe just a hair lower, but you get the picture. So for sterling, look, the turn was great. I didn't like how it ended here, but it's the same trade that we were talking about with euro, same trade that we're talking about with gold, right? That move right into the start of the month, just a lot of indecision, comes right back, right? And the market's fishing to see, are there any takers to push this move back? So look, that resistance hold, again, it was an outside day reversal. So into resistance, you pump, you make a higher high, and you close at a lower low than the previous day, typically a bearish development, especially when it happens at the top of the range, especially when it happens at resistance. So yeah, I think, again, I'm not sure quite we get down to 28.06 like the original plan, but I still think everything here is unchanged. Again, objective, right? I don't care what anyone's opinion is. Objectively, we're in the weekly opening range and we're at the weekly open. So you have to treat it as such. 28's the line in the sand. Breach higher, you're looking for 30.80. You're looking for 31.75. Questions on sterling? Seems like US dollar weakness is correlated with risk in equities. So you've been seeing the dollar, track very closely. Absolutely. That's not so surprising either in this market. Not so surprising either. And I've been playing that by way of actually the one I was checking out the closest was sort of dollar cat to see if that SPX rally was going to hold. And on this move higher, I want to see if it was going to be sort of an inflection there. But by the way, SPX, I don't even have that on the list today. I don't know why. Here's SPX. Let's just do that right now. It's number 8. We're at resistance, and we're at big resistance. Here's the daily chart. So remember, into the start of the month, we said, hey, upslope broke. Look for that as resistance. And man, it's been resistance, resistance, resistance. Still is. We haven't closed above it. From a lateral standpoint, it's a basic 618 at the drop, 34.44. Here's what it looks like on the intraday. Even within the confines of the actual near-term ascent off the lows, there's the median line. So again, looking for a reaction in these trades here today. A little bit cleaner here on the slope to show you the channel. Support, 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 break. Resistance. Look for some reaction here today. Okay, pivot above 34.45 on a closed basis, looks for 34.95, easy in my opinion. That's just this September open. That's the 75% parallel of the upslope that we're currently in. Really nice spot right here. Okay, this retracement, null and void. We've got a new high in play. Puts the focus back on the February high as support and near-term bullish invalidation. Questions on SPX? What do we look for to trade against resistance? Rohan, it has to be a swing high. So if you're trading a counter trend trade and you try to play the reversal, is that what you're saying? I think is the question. The way I trade those is that you wait for the real test. Okay, so the US market's open. You look for the real test. If it probes here and fails, you kind of wait for the upswing and the stop is against that high to play the move lower. You never take an initial approach because you have no idea. It might be something like this where it goes right into that trend line and pop higher. And all of a sudden you're sitting in an upside trade with no objective stop. Guys, we cannot overlook or sidestep or push aside risk management. It has to be paramount in every trade you ever take. The risk is more important, as I always say, sometimes than the limit. A lot of times I'm jumping into a trade, guys, believe it or not, I have a stop on it, but I don't have a limit. It's really, the most important thing is always capital preservation. So if you're trying to trade into a resistance level, there has to be that test, a high registered, and then a high to trade against, Rohan. Just my humble opinion, man. Trust me, it doesn't work otherwise. I've tried it, every time early in my career is my biggest thing because I had such faith in trend and resistance and support. And you'll get something like this where you're trying to sell into resistance and it's just the onslaught. You're getting something like this where you're selling support and you're just massacred. And it works eventually. But on all of these trades, once the trade retracted or once the break happened, then it got faked out. Now in this recovery, you have a stop to trade against, right? You were trying to trade, let's say you're trying to fade this median line, you wanted to sell against it. Well, you might have gone in here and it might have worked. Oh, great, I'm in a great trade. Boom, stopped out. But guess what? On the pullback here, now you have a stop to trade against. So it's always better to let it make the probe, use that registered high with a stop just above that to play the pullback when you're trading counter trend. Always recognizing also, guys, if you're trading counter trend, you're like half leverage, if not less. You're always better off buying at support and uptrends and such. All right, good questions, Rohan. I got you today. That's SPX. Let's hit dollar yen real quick. This will be number 9. Man, I got to pick up the pace here a little bit. Here's Yensky in resistance. Okay, this is the same level that we were looking at earlier in the week. We talked about this level at at length. 105.89 into 106.09 was the resistance zone that we were looking for into the start of the week. It's the 618 retracement. It's the September open. It's the 2019 low day close. And yes, stop traffic. You also have slope resistance there. Here we are. What do you want to do with it? I'm not going to try to fade that just yet. At the same time, I'm not going to buy at a multi-week high. What the hell is that? So looking for reaction here today in dollar yen. Here's what it looks like on the daily chart. So the 2019 low day close, it was a low day reversal close that we registered in August. Huge pivot in price on the break, acceleration, on the breach, acceleration, support, support, break, acceleration. The last month or so has been a mess. Here we are again, upslope resistance, downslope resistance, all right here. Look for reaction. The one thing I like more about dollar yen is, unlike some of the other dollar crosses, it's actually made a move this week, right? It actually chose a direction, made a move, and stuck with it. So with that respect, I think we got to give it a couple of props here on dollar yen. 106.09, still the level that we're looking for resistance. If you see that top side breach, I do think you have a 50 pip range to 106.60, if not higher. But definitely looking for some sort of reaction here today. Longs at risk near term below 106.09. Rohan says, sure, thanks. You're more than welcome, Rohan. Marcin says, all in looking for long with with a close eye. He says, joking. Yeah, I know, right? A lot of people would be looking for the long breakout here to buy. Hey, it might. I just don't think, obviously we just went over how to actually effectively trade that. But for dollar yen, I think it's going to be one of those, again, risk sensitive pairs. SPX is at resistance. Dollar yen's at resistance. Let's see what happens. That's all I got to say. Mike, with euro now pulling back off resistance, can we short against the recent highs? Rohan, you can do anything you'd like, my friend. If you're asking me, would I short against the recent highs from here? If I was northbound of 1750, I probably would have against that high, but now you're looking at a 40 pip stop. What's your target going to be? Below the weekly opening range? That gives you less than 30 pips on the downside. So personally, I'm not a big fan. Also, let's just take things into account, try to keep things as objective as possible. If I just take into account just the weekly range, let's say I'm one of those guys, I got an old platform, I'm plotting charts by hand, and all I see is the weekly range, you're in contraction. So if you were to sell a break there, and that were to hold, where does that leave you? Rohan, I'm not saying that's what's gonna happen. This might plow right through this right here and go straight to 116.20. I don't know. But I'm just trying to say, when you're looking for scenarios and trade opportunities, unless there was like a instigated move, a break, some sort of headline, which I don't see crossing right now yet, but you have to always just take into account the objective nature of price action. We're still in the weekly range. We're still in contraction. You can be looking at a 5-minute chart, it might get faked out. Weekly open, monthly open is 1717, right? So I want more clarity. Trust me, no one wants to be on euro more than me. I was on this short earlier today already, or this week already. So my ideal scenario does look for the pullback, but we have to be disciplined. We have to be disciplined. Cheers, a lot of education for me today, says Rohan. You're in the right place, brother. All right, so again, I'm going to pick up the pace here a little bit. That was dollar, yen, and euro. We need Kiwi. Here's New Zealand dollar. As far as I'm concerned, one of the cleanest trades this week. The reversal here, likening to what we're seeing in sterling and some of the other dollar crosses, we made an outside day reversal and it followed through. What a refreshing note. So here's what Kiwi rather looked like earlier in the week. All right. We were heading into this resistance zone, 2 levels of interest that we were looking for. 65.60, 65.57 was that 1618 extension. Just higher was the median line. Bearish inval was 66.85. It held. Break here. We've already tagged the 618, but now we're kind of dipping and faking the lows, okay? So you want to curb the appetite from here. This one has already taken out everything. It already took out 38.2 and the 618. This reversal here, if you're still in the short, I wouldn't be because of that. But let's say you are. Look for a reaction again at 618. Near-term resistance at 66, 66.06. A nice fib confluence there. Bearish inval drops from 66.85 to 66.57. If you do resume lower from here, downside targets would still be unchanged at 65 and 64.85. Don't have any exposure left on this one, unfortunately, regrettably, but at the end of the day, like I said, this one of those trades where you made a really clean weekly opening range, it broke right near resistance. First level, as soon as we broke through it was resistance, was resistance, was resistance. Second level, that has me concerned. That has me concerned. So if we were to close today's candle as such, it would actually be a hold above slope support. Right? And downslope support. So, look, what do I want to say? I mean, you could get a bounce here, I guess is what I want to say. You could get a larger bounce towards 66, towards the upper parallel. But really, weekly open resistance is still bearish, and I don't know why that's not on here. Weekly open resistance still is now what I want to see, the exhaustion high, ideally. So still bearish inval, 66.57, but ideally on this stretch, if we get a pop, one of these two levels should hold, downside break. You're looking for that 65 handle. Questions on Kiwi? That's number 10. Number 11 is peso real quick. So another one where beautiful move, tired as hell now. It's tired as hell now. The major support zone that we talked about was 21.2316 into 29.40, big zone, confluence support. You know, while we broke the upslope there and even broke former downslope resistance turn support, we've done nothing since. Here's the weekly open. You plowed into that region, you bounced, and we're right slap in the middle of the weekly range. So not much to write home about here. Here's what the trade looked like earlier in the week and month. As we were opening up the week, we were saying, watch these regions, key support. Well, sat there for a hot second, broke below it, rammed into key support. Here's the recovery. So again, all things held constant, things aren't as radical as they seem on the near-term charts. We've come into some big levels, and there's just that hangover effect. The market's kind of just digesting. Look for the consolidation before the next decisive move. Again, here's how critical that level was. Huge. 618 retracement of the yearly range, 618 extension from the decline off the yearly high. Nice level. Okay. All right. That's everything on my list. Let me take your Kiwi yen. Was that what you wanted to look at, Rohan? Let's see what that thing's doing. Okay, so really messy upslope break. I wouldn't even call that a break. Kind of ugly, but nonetheless. Man, for this, Rohan, it's clear as day, man. It's just a very clean weekly opening range, right below downslope resistance. It's actually a clean setup from a positioning standpoint. Downslope resistance extending off the high that he made back there in August. 50% retrace of that decline, and the weekly and monthly. Here's your monthly opens. This is the daily. Here's your monthly open. Here's September open. But I guess let me just keep that highlighted from the last, the July open. So the July opening range never gave out. Here's the start of this month's opening range. Same range is in focus. I could attack this like 7 different ways right now. I don't want to even get into it. Look, it is a simple range below slope resistance is all I would say on this. I wouldn't overcomplicate it. I wouldn't overcomplicate it. Now, what I'm trying to do is give it slope for the decline because you have a definitive break on the upside, right? For what your target and extended move would be, but you don't on the downside. So look for a break of that range. I wouldn't even stress the slope right now. Look for a break of this range. I mean, it's real again, it's really not a trade I'm interested in, but this is what I'd be focused on. And again, pistol to my head, I would think he'd get the pullback um, before the rupture, before the breach. Huh. Watch those levels, but no potential here. Yeah, not in my opinion, man. What's top side? What's resistance on top? So you got the 7170 would be the 50% retracement, and you got the high day close, which is something I'll also always kind of keep an eye on here for the month. It's a multi-month high day close. That's 7190. So both of those regions converge on basic slope resistance off the highs. That's obviously your key resistance. All right. Marchin, can we see your view on Jamie's pound Oz trade? So I think he's looking on the long side there, right? Um, where's pound Oz? So yeah, I like the premise of the trade just based on where we are. I do think you get a drive lower, um, maybe perhaps from the weekly range before the resumptive move, but I do like it. Definitely like it, yeah. So it's the 618 retracement of the entire advance off the lows that we made back here in, what is that, 2015, 2016, right? So it's a massive multi-year fib level. Obviously, we dribbled and dabbled below it, but you saw the reaction that we've gotten. And the overall wave pattern to me, it looks like a 1-2-3. So just by first glance, you want this to be sort of a consolidated, maybe truncated 4, and then the extension for the next leg. I don't know. But I definitely love the ranges of where we're coming off of, the reaction we got off that region. And I think right now it's kind of still the same trades that we've been looking at. You're still in consolidation. I mean, all of these trades are made a stretch, big zones, look for the consolidation. I just want to see if there's anything here. Yeah, it could be working with something like that. Hmm. So look, weekly opening range is intact. I would respect the weekly opening range break. My concern is that if you break 79.80 on the downside, your basically confluence support break would really open up like the possibility of 78.30. So I like where it's positioned. It's just that we've got to hold support basically here. Where's Jamie's entry? I think it was 18. 18 or 180 rather. Okay, yeah. So I mean, it makes sense if you get the drill lower. That's basically right at the range lows of the week. I like exact. I mean, we'd need to see a hold there, but yeah, below that, like 79.40s, anything beyond there, I think you're in trouble. I think you're in trouble, but we shall see. I haven't really been studying. I haven't really been following this one, to be quite frank with you, Martin. Um, I do like I said, I think we talked about this as we were approaching the 6-1. I do like that we buckled back above, but if this is going to work, certainly the downside sort of needs to be limited in the near term. Make sense? And crude, please. Okay, last but not least, I'm way over on time, but here's crude. Oh, wow. Okay, so we made a nice reversal there. Took back the whole loss that we did for the first part of the month. I haven't looked at this in a couple of days. Here's the 618 retracement of the decline off the high from last month. Oof. Just look how many people probably got massacred on this. Yeah, I mean, look, You're not out of the woods yet. You're not out of the woods yet. That's still key resistance. That's still key resistance. 42.34 is always going to, it has been, and even on the way up here when we were trading above it, I was like, man, this is such a big level. I don't give a damn. Let's say we see some acceleration off it, we're in trouble. And look what happened. We straddled it for over a month and a half before it buckled below and then collapsed. So that's still the level you got to be. Nothing's changed about it, and it converges on downslope resistance. Okay. 2018 highs, this year's highs, right there. So, yeah, possibly a little higher, but I wouldn't say we're out of the woods just yet. Here's the intraday chart, just to put things in perspective. If slope's gonna hold, you know, you don't even have route to 42. You might fail ahead of it. Look for reaction up here. Bearish inval, initial resistance. Make sense? Yeah, intraday, I would say intraday, look for some reaction here. Daily, critical, critical. All right, guys, I have got to run. Thank you so much. It was great to see all of you. Best of luck into the trade or close of the week. Listen, if you're light on positioning, it's fine. Take it easy. I honestly, unless we get something reaction here, excuse me, specifically today in US trade is the only time I'd probably actually take something left for the week. If we get the failure at these choke points that we're talking about. But if not, keep the powder dry. Again, we're heading into some really good volatile sessions ahead this month, I believe, and the market will provide. So guys, have a great day. Again, have a great weekend. I'll see you on Monday for the free session on Daily FX, right back here on SB on Tuesday and Thursday. Cheers.